Former HP CEO, host of a new podcast called By Example, Carly Fiorina joins us now. And it's always good to see you. Thank you very much for coming on. And, you know, we can, I hope, just continue a discussion we were just having about the president's agenda. I've seen you make some comments recently about President Trump's agenda overall, in particular on this trade issue. He seemed to get a bump over the weekend, at least in Wall Street's mind, from putting a truce in place with China. Now we're giving all of that back today. He's identified himself as a tariff man. What do you make of the way he's handled these negotiations?
Well, I think part of the concern here that's expressed itself over time is people are wondering, are these negotiations show or are they substance? And what I mean by that is, of course, President Trump is absolutely right when he says we have a trade imbalance with China. We have things that are going on with China that are neither fair nor free, and we need to fix it. On the other hand, when you look at what's happened, for example, with North Korea, big show, not a lot of substance. And so I think the market responded because they thought, oh, good, President Xi and President Trump are together and they're saying the same things and we actually have a truce. And then as more details came out, it became apparent that maybe President Trump's version of events and President Xi's version of events are different.
Right.
And that suggests we had a nice show, but the substance may be quite different. And I think the market in general doesn't like tariffs because tariffs add cost to companies. That costs jobs, as we've seen with GM and Ford and others.
Well, you're definitely right on that key point about, and maybe we haven't talked enough about it, but when the two sides put out essentially press releases after they met in Buenos Aires, they were completely different. I mean, if you looked and compared them side by side, what the U.S. was saying went down and what the Chinese said went down may have both been true, but they highlighted completely different points. So that did bring up some questions in people's mind if they were on the same page. Now, on the point about tariffs, if you were making policy, now you ran for president, if you would look at it, I'm sure, and say, yeah, some of what China's doing is unfair. But how would you deal with it? We ask this of guests all the time. If not tariffs, then what?
Yeah, so the reason tariffs don't work is because they end up harming companies, consumers, and ultimately workers. And I think we're seeing that. We're seeing that with soybean farmers. We're seeing that with auto producers laying off 15,000 General Motors. I mean, General Motors estimates that these tariffs on steel and aluminum have cost them an additional $1 billion on the bottom line. That means jobs. So the problem is tariffs don't work. We've seen that over and over again. What I would do, honestly, is say to China, look, you ask us to play by certain rules in your economy. We will ask you to play by those same rules in our economy. What that means is you cannot buy companies 100%, as the Chinese have been doing in America. You can't list your companies on the New York Stock Exchange. We're prevented from doing so in China. If you want to make an investment in the American economy, you're going to have to get the American government's approval. Those are all rules that businesses are forced to play by in China. And China doesn't have to play by those same rules here. I'll guarantee you that that would impact China's economic interests, and they would come to the table, because ultimately China cares mostly about their own economic interests. We know that. We have allowed them to play by a completely different set of rules. It's time their rules apply to them.
That's interesting. The president argues, I guess, that they're at the table now because of his tariffs, but you're saying that's not the case.
No, I don't think that's the case, honestly. I think it's in China's interest to be at the table. They certainly don't like those tariffs in some ways, but as we've seen, they have the ability to punish our own producers, perhaps even more dramatically than we can punish them. I mean, look what's happening in the Midwest. Our producers are being punished. The Chinese know how to play that game. It's why tariffs generally lead to slower economic growth. We've seen that before with Smoot-Hawley after the Depression.
Right.
Tariffs generally lead to higher costs, lower growth, and fewer jobs.
What's your overall view of the president and how he's handled the economy? Because that's where he has his best ratings if you look at the polls. He's not tremendously popular in the overall approval ratings, but, in some of the polls, he's well over 50% in terms of how he's handled the economy. So big picture, not just trade, but taxes and everything else. And the second part of that question, what's your outlook for the economy next year? Because that seems to be what's being priced into markets today. We look at treasuries and some other action.
Yes, that's right. And that outlook isn't all that rosy. So first, I would say there's no question that many of the things that the administration has done have been incredibly good for the economy. Tax reform was good for the economy. Regulatory reform was good for the economy. There's no question. I personally wish we would get to infrastructure, because I think the right kind of infrastructure program structured as a public-private partnership would continue to add growth to this economy. The concern, I think, is that the stimulus from tax reform is abating. The stimulus from regulatory reform is already baked in.
Right.
We have, obviously, deficits that are spiraling now, I would argue, out of control. Trade issues that are unresolved, costs that are going up for companies in many cases because of tariffs or the threat of tariffs. And so I think the general outlook is starting to be, wow, we've had a great economy for the last 18 months, but it's not going to continue at that pace. The economy will slow. And I think that's what you see priced in.